Oracle delivers a big disappointment. Tech companies seeing weakness across the board in license, maintenance, and hardware. European banks borrow almost 500 billion euros from the European Central Bank for 3 years, and U.S. markets try to hold on to a Santa Claus rally. I'm Alix Steel, and the morning call starts right now.
Good morning. I'm Scott Redler, Chief Strategic Officer at T3Live.com.
And I'm Alix Steel for The Street, and together we bring you Morning Call Express. Scott, let's get right to it. We have the S&P having that nice Santa Claus rally Tuesday, closing up over 3%. Can it last? Will this rally actually hold through today?
It would be nice to see some follow through. I'm not expecting any big move today. The futures are up a little bit. All I want to do is see a little follow through. I want to see us hold, digest, and then continue along, because right now, yesterday, the market took a lot of people by surprise. I know I came in flat, so I positioned midday, multiple longs for what could be a nice move into year end. I'm not expecting anything explosive, but it'd be nice just to continue along, no real curveballs, and just see anyone who has to be at work that wants to maybe make some gains, have that path of least resistance to the upside.
So let's go to the chart right now, because I want to see what that level of support has to hold for the rally to still be in play here.
Okay, so take a quick look at the S&P and you will see, yesterday we had a really nice igniting bar. If you look long term, you see this was a reversal from October 4th to the high here at 1292. We corrected, held that important Fibonacci number, came back up to resistance, and then we held higher again. This uptrend from October 4th is still intact, and yesterday the market woke up. The question now is, can it get through this resistance, over the course of the next week or so?
And before we got on camera, we were just talking about, we saw the futures up more a few hours ago, and they sort of sold off a little bit. And I was wondering, is that profit taking because of that big jump that we saw and that resistance level? Or perhaps was it this ECB lending almost 500 billion euros to the European banks? Was it too much money? Does it show that the banks were that much worse off? We were trying to decide which one it is. What about you? What do you think?
I think that this is the disguised bazooka that everyone really wants. People didn't think that they would get all, it would go that big, but this is a 3-year loan, so that kicks the can very far down the road. And these banks now, if they wanted to buy the sovereign debt, you're going to see yields go down. So if we see more indications like we saw with Spain's yields going down, I think the market will take that very positive. As far as the futures being up 9 or up 4, it's it's just going to be a choppy day because yesterday was so big. Right. You have to digest it, and then I think relative strength will come to stocks, and stock patterns will outperform the overall indices in the next week moving forward.
Let's get to those stocks very quickly. We want to touch on, Scott, what stocks you're going to be looking to add to your longs, maybe a Google, maybe an Apple.
Well, Google right now is my play for 2012. It's holding higher. I bought some yesterday. If you look real quickly on the chart, you will see one of the best high beta tech stocks holding higher, going sideways, above all the moving averages, above 635. You can get going real quickly on the monthly chart. Look how beautiful this looks. Really tight, coming into resistance. You have a nice 3-year range. I do think this stock can get over 750 in 2012.
So would you be adding to these positions right now today or holding?
I'm going to hold and see how they act, because I want to stay with them. If I get too much, I'm not going to be able to stay the course. So for me, I might add more for a trade and take it off, but I'm going to try and stay net long that one. And also, like you said, Apple woke up yesterday. It's been holding the support. It was starting to put that head and shoulders top in. It looks a little bit better now. If you want to take a quick look here on the daily, you will see that you had a nice wide range bar yesterday. If it can get through this 396 through yesterday's high, I think the next level is easy, 400 to 410. Then it'll have to deal with that earnings gap that comes in right there.
And then what do you need to sell into strength here? Do you need to sell at banks like a Bank of America, Goldman Sachs, that had almost 4% moves yesterday? Do you want to take some profits here or hold?
I think they have a little bit more room for the oversold bounce. I mean, Goldman, some Bank of America, they had day one from the bottom. I think Goldman does have some room. If you want to look real quickly in the chart, it gets above this 92. You could see 94, 95 before you have to worry about selling.
And last stock I want to hit on going to be Oracle, down 10% in pre-market. Big disappointment yesterday on all fronts, revenue, earnings, outlook, you name it. Do you want to buy here on this dip, or do you need to stay away?
I'd like to see the market isolated and let the market go up with Oracle, not really affecting it. But it's hard because a lot of people know the stock and like it. I do think it might be buyable. If you take a quick look at the chart, you will see it's not here. It's not at the highs and the disappointment. It already came in. So it's opening around 27. I think after it puts in about a 15-minute low, buy it versus out low. I'd rather buy it here than sell it here.
All right, we're going to be looking at a lot of other stocks and sectors, including, say, IBM and Hewlett-Packard, and see if there's any derivative plays off of Oracle during the entire morning call. So join us on The Street.